Hi, my name is Gurkirat Kaur. My student ID is 20173732. In this assignment, we have four group members Gautam, Kirti, and Monica. During the COVID-19, the world was facing recession and so does the country was also facing. The government and the Reserve Bank of Australia have made various policies for the relief of the economy. The Reserve Bank of Australia implements a monetary policy to support the economy in different ways. The policy was implemented so that employment, business, etc. could be able to remain at a certain level assess. Unemployment in the country could cause many issues for both of that is government and public itself. In question number 1, policies and programs introduced by the government and central banks are described along with its impact. The impacts are described on the factor are inflation, unemployment and output levels. Policies and programs. The government was watching the economy announces various packages for the upgrading condition of the economy. Measures were taken by the Reserve Bank of Australia. First, policy interest rate. This cash rate was reduced to 0.1% during the period of the pandemic. Cash rates are those rates that are charged between the bank against the borrowings of each other. The cash rate was reduced to such a lower rate to support the economy. The borrowing cost will be lower than the usual cost because of the low cash rates. Changes in policy interest rates make the easier process of borrowing in such as recession time. Second is no changes. The Reserve Bank commits that there will be no increment in cash rate until inflations occur within a certain range that is 2 to 3%. The bank has committed to do so because there was uncertainty at the time of the pandemic and nothing can be assumed for the economy. Third, purchased assets. The bank announced acquiring government bonds issued by all forms of government in the country. The bank purchased these assets in the secondary market through the acquisitions of the assets. The bank was successful in reducing the whole structure of the economy. The mechanism, which was related to the cash rates, also applies here. Assets were purchased at higher prices. The purchasing of the assets made the process of lending easier and gives confidence in spending the funds received. Fourth, terms funding facility. The Reserve Bank allowed loans for 3 years and interest rate will be equal to cash rates at that time. Banks are allowed these loans so that commercial bank can give aid to the general public and the business and lower interest. This facility is provided so that loans are available at lower interest and the credit facility should be increased. Fifth point is exchange settlement balances. There was zero interest on the interest rates being received by the banks on exchange settlement balances. The zero interest rate also facility of lower borrowing Reserve Bank of Australia 2023. The Government of Australia announces many packages for economy relief. An additional amount of $41 billion was announced in the year 2021 and 2022. The total support from the Government of Australia from the introduction of the virus was $291 billion. These are the direct packages that act as an aid to the economy support. The government also was working with the other forms of government in country to provide financial.
Hello everyone, I'm Kirti. Today I'm going to explain about impact of policies and programs on unemployment. The government of Australia was trying to save the economy in every way, and thus for workers it has announced the JobKeeper payment program. The program was successful in saving the employment of many employees and other workers. The introduction of this program reduced employment losses by 7 lakhs during the start of program BISHOP 2020. Some of the employees remain out of this program because the government has set some target for the workers and employees for whether they can become a member of this program or not. All types of workers were covered in this program and thus this program helps in retaining employees during the pandemic. Next one is impact of policies and program on inflation. The inflation target was set and the target was 2 to 3% only. Scheme 2022. The Reserve Bank of Australia has changed monetary policies to bring the inflation level to this target. These ranges were set after analyzing the previous inflation rate and other countries' rates. The country was facing a major recession and inflation was high at that time. After the removal of some restrictions, the level of inflation became normal. The Reserve Bank of Australia has already committed that whenever this range will be crossed, cash rates will increase again. Thus, the monetary policy has major effects on inflation. Changes in monetary policy help to increase the inflation level. One is impact of policies and programs on output level. The output level increases after the introduction of policies and packages. Funds were available at low cost and hence business were encouraged to produce more. Low interest rates increase the flow of money in the economy and thus consumption and expenditure also increased. People were able to spend and businesses were able to produce. Production increases with the increase in flows of cash.
Hi, my name is Monica and I am presenting question number 2, in which we have to calculate the equilibrium level of income and the output gap and ways to remove the output gap. So what is the equilibrium level of income? The current level of equilibrium is the situation where all the produced output will be sold, which means demand will be satisfied and no stock left. In equilibrium, total demand is always equal to the total production or the supply. All the stock which is either produced or purchased will be sold out at the equilibrium level. So in the question, and there is no net export is given, the other expenses are given. So we can calculate the equilibrium level of income by the equation, which is AD is equal to C plus G plus I. So since there is no net export, so we can leave that expression. So in this C plus G plus I, where C is the consumption, G is the government expenditure and I is the investment. So by calculating all of these, our equilibrium level of income come as 15,750. So what happened is, now the full employment level is 15,000 and the equilibrium income is 15,715. Thus we can see that there is a gap between both of them. So this gap is known as output gap. So what is output gap? The output gap is the measure of the difference between the actual output, that is Y, and the potential output, that is YF. So it's the Y minus YF. So as in slide we can see that the output gap is the difference of potential GDP and the real GDP. So what is this? This 15,000 is the Y, means actual output, that is real GDP, and 15,750 is the potential output. So what we do is we subtract this 15,750 from this 15,000. So what we get is minus 750, that is, this is the output gap. So as it is negative sign, so we can say it as negative output gap, or we can say as negative recessioning gap. So the negative output gap means an economic downturns with unemployment and spare capacity. So the government has to remove this output gap to achieve the level of equilibrium. The government has to do more expensive for the public welfare, and the government requires to incur an addition of $750, so that value will be in equivalent in both the full employment level and the equilibrium level of income. And government will increase expenditure on the job seeker program by an addition of $750. So as we can see it here, government can increase the expenditure in job keeping payment program So like this we can decrease the output gap, so that our full employment level and the level of equilibrium income will be same. So this is in case of the job. And what government can do in case of taxes, the government can remove the output gaps by decreasing the tax, by decreasing taxes by the rate of $750. The reduction in tax will encourage more consumption among the citizens, and then the full employment level will be equal to the equilibrium level of income. Thank you.
Hi, I am Gautam. My student ID is 20173496. Question number 3. Cash rates and open market operations are defined along with the ways of changing it. The changes in cash rate affect open market operations and description is defined in upcoming slides. The effects of cash rate on other interest rate are also mentioned in the last. The cash rate is also known as overnight money market interest. The cash rate is decided by the Reserve Bank of Australia, which represents the interest that banks need to pay on the amount they borrow. Usually, banks take a loan from each other overnight and pay interest on these borrowed amounts. The Reserve Bank of Australia implies monetary policies through the change in the cash rate. The Reserve Bank of Australia changes cash rates according to the economic conditions and situations of the market. In open market operations, the Reserve Bank of Australia purchases and sells securities in the market. The Reserve Bank of Australia purchases or sells these securities in the market to increase the money flow in the market or to decrease the flow the market in the open market. Securities are purchased or sold out. The secondary market is not involved. Open market operations are used to tool of monetary policy. The Reserve Bank has to ensure balance in market. It ensures that more money does not flow into the economy and also there will be no shortage of flow in the economy. The Reserve Bank of Australia, when notice that there is more flow of money in the market, then it decides to sell some of the government securities in the open market so that excess money can be taken from the market and thus maintains balance when there are excess flows. Price usually go lower and thus affect the economic activity. The Reserve Bank has to maintain a balanced relation between demand prices and all the communities. Where there is shortage of money, the Reserve Bank of Australia decide to purchase some of the government securities from the open market to get that additional money flows in the market. When there is shortage of money, the price goes higher. Condition of inflation arises. Low desk communities are affected by this. The Reserve Bank has to ensure that sufficient money flows into the market. Open market operations and cash rates both are used for maintaining balance in the economy. The Reserve Bank of Australia used both tools as a monetary policy. During COVID-19, both tools are used and some securities were purchased from the market and cash rates were reduced. Open market operations affect the money market. Overnight flows are withdrawn of injected into the market overnight. Open market operations affect the supply of money. If in open market operations security are sold out, then the reserves of other bank go down and thus cost of borrowing increases. When borrowing costs become higher, people generally do not refer to borrowing. The prices before selling the security were not high, and then after prices become normal, the Reserve Bank of Australia purchases security from the over market because prices at the time were higher than usual. usual prices. There was a negative impact on the economy and its operation. Excess flows are injected into the market and thus economy comes in a balanced situation. Increase in cash rate. When cash rates are increased, the borrowing cost increased for both, that is commercial banks and the general public. Cash rates affect other interests directly. The Reserve Bank of Australia noticed the condition of inflation in the country, then it increased the cash rate along with the increase in cash rates. Another interest rate also becomes higher when banks have to pay higher interest on the funds, then they will lend funds on additional interest. The interest rates will become higher on an increase in the cash rate. Decrease in cash rate. The cash rates are decreased so that extra money can flow into the market. When the Reserve Bank noticed that there is a shortage of funds in the market, it decreased cash rates so that borrowing costs become not expensive and most people acquire funds in different ways. If loans are available to commercial banks at lower interest, then they will lend funds to the business and other individuals at low interest. Thus, the interest rates become lower when cash rates become lower. The Reserve Bank of Australia, for the betterment of the society and economy, lowers the cash rate, hence interest rates are also reduced. There is direct link between cash rates and the interest rates, and other interest rates increase with increase in the cash rate and vice versa. So the cost of borrowing also depend on the cash rate. The cost of borrowing increase when the cash rates are increased, and the same condition in is applied in the decrease of cost borrowings as the consequence of the decrease in cash rates. Funds are available at a lower cost when Reserve Bank wants to provide funds in lower rates and vice versa. So interest rates and sum of the borrowing cost depends on the cash rate.